Welcome back to the Deep Dive. We're diving into global markets today using Bill Cara's Week in Review Report number 2 as our guide.
This follows his report from January 12th, which we did a deep dive on already.
Right, his January 12th issue, number 1.
Exactly.
It was packed with some great analysis. This new report builds on a lot of those themes, but there are some pretty interesting twists and turns as we're in the thick of 2025 now.
What's fascinating is how he's really weaving in the realities of what we're seeing out there.
Yeah.
In his first report, he predicted a pullback this month.
He did.
And now, in this report, he points to JP Morgan's upcoming Q4 earnings report as a potential trigger.
Interesting.
Because he thinks their forward guidance, particularly their views on inflation and interest rates, might just spook the market.
Okay, so it's like a detective story unfolding.
Absolutely.
So for those of you tuning in for this deep dive, we're assuming you're already familiar with the basics.
Yeah.
We're going to go deep on the key takeaways from WIR Week in Review number 2 and how it compares and contrasts to his previous report. And of course, the big elephant in the room is Donald Trump's return to the White House.
Absolutely.
How is that impacting his outlook?
Yeah.
So buckle up. This is where things get really interesting.
One of the consistent things that I see in both reports is his emphasis on the overwhelming influence of central banks.
Yeah.
Especially the U.S. Federal Reserve.
He hammers that home every time.
Absolutely.
The U.S. dollar is the world's reserve currency.
Right.
So when the Fed sneezes, the whole world catches a cold.
Exactly. And so he talks a lot about how they're manipulating interest rates. He uses this teeter-totter analogy, which I think is quite good.
Yeah.
Where in the first report, he was talking about the Fed doing quantitative easing, which is basically, printing money to sort of soften the blow.
Yeah.
Now he's sort of sounding the alarm bells that that's actually what has led to inflated equity prices and that we're on the verge of a market crash.
Doesn't mince words.
No, he doesn't.
So were we in a market bubble?
Well, he seems to think so. And I think one of the things that he points to is investors right now scrambling to raise cash.
Okay.
They're selling bonds in order to increase liquidity.
And speaking of liquidity, let's move on to another area where he provides some really good analysis, and that's the Forex market.
Yeah, I think Forex...
For those of you who don't know, Forex is just currency exchange.
Right. It's a 247 global marketplace, and it's where currencies are traded in pairs. And these pairs kind of act as a barometer of the economic health of the countries.
Right. And in this report, he really digs into the nuances of the Forex market. He even points out that, for example, even transactions in other currencies, like the Mexican peso, the Canadian dollar, they're often ultimately settled in U.S. dollars.
Exactly.
That just goes to show you how powerful and how ubiquitous the U.S. financial system is.
Right. And I think the key takeaway here is that the strength of the U.S. dollar, particularly against other major currencies like the euro, the British pound, the Canadian dollar, it creates both opportunities and challenges for different players in the global economy. It really depends on your perspective.
Yeah.
And, understanding how these fluctuations can impact, your portfolio.
Now let's move on to another area where we see some interesting parallels and divergences from his first report to his second, and that's bonds and yields.
Yeah, bonds and yields.
Just for our listeners, imagine a bond as a loan. You lend money to an entity, it could be a government, it could be a company, and they promise to pay you back with interest. That interest rate is what we call the yield.
Right, exactly.
And he astutely points out that government bond yields, in particular the U.S. 10-year Treasury yield, act as vital economic indicators.
Yes, they do.
They reflect investor confidence, inflation expectations, the overall economic health. And what's really eye-opening in this new report is he contrasts rising government bond yields in the U.S. and the U.K. compared to falling yields in China.
Right. It makes you wonder where the global economy is truly headed. And, these trends have significant implications for all asset classes, but particularly stocks. As bond yields rise, stocks with high valuations, think of those high-flying tech companies, they could take a hit.
Okay, so we've got central banks playing this high-stakes game with interest rates.
Yep.
Currencies are fluctuating like a roller coaster. And bond yields are signaling these, shifts in the global economic landscape.
Yeah.
It's enough to make your head spin.
But that's what makes his analysis so valuable. He doesn't just explain these complexities, but he helps us to understand how they translate into real-world economic events and trends.
Yeah, and that's where we start to see some interesting divergences from his first report to his second.
Okay.
Remember the first one, he spent a considerable amount of time speculating about the potential impact of Trump's policies.
Right. He was the president-elect at the time.
Exactly. Now Trump is back in the White House.
Yeah.
It's 2025, and his policies are creating shockwaves.
They are. What's particularly striking is how he tackles the potential fallout from Trump's protectionist policies.
Yes.
Remember those tariff threats aimed at Canada?
I do.
Now he delves into the potential consequences of an all-out trade war.
Between those two.
Yeah.
Yeah, and he even quotes prominent Canadians warning about the devastating impact on both sides of the border.
Absolutely.
This is a stark reminder that politics and economics are very much intertwined.
Absolutely. And he masterfully uses this Canada-US example to illustrate a broader point about the interconnectedness of the global economy.
Yeah.
He's arguing that, disrupting these relationships can have ripple effects far beyond the initial target.
It challenges that notion of isolationism,
Exactly.
and it underscores the importance of understanding those global dependencies. It's not just about Canada and the U.S., it's recognizing that everything is connected.
Right.
Now, shifting gears a bit, another key difference I noticed between the two reports is the amount of attention he dedicates to U.S. equity markets.
Okay.
In the first report, he provided a pretty comprehensive overview of, market movers, technical indicators, sector-specific analysis.
Right.
But in this second report, he seems to kind of zoom out, to capture the bigger picture.
Absolutely.
He's sounding a note of caution. He's suggesting that the U.S. market might be approaching a long-term cycle high.
Right.
He points to inflated price earnings multiples, sell signals flashing from technical indicators like RSI 7 and MACD.
Right. For those of you following along at home, RSI 7 is a momentum indicator. It measures the magnitude of recent price changes to evaluate overbought or oversold conditions.
Exactly.
In the price of a stock or other asset. And MACD is a trend-following momentum indicator. It shows the relationship between two moving averages of prices.
Yeah, and what's interesting is how he connects these technical signals to his earlier prediction about a January pullback.
Yeah.
He's arguing that this combination of overvalued stocks, these technical warnings, and, this potential shift in sentiment triggered by J.P. Morgan's forward guidance could create a perfect storm for a market correction.
Yeah, and he doesn't shy away from painting a pretty vivid picture of how this correction might unfold.
Yeah.
He describes this cascade effect where selling begets more selling, leading to a rapid and potentially painful decline. He even uses the term no bid to illustrate a situation where buyers completely disappear and sellers are left stranded.
With plunging asset prices.
Exactly.
It's a sobering thought, but it's important to remember he's got decades of experience navigating these market cycles.
Absolutely.
He's seen it all.
Yeah.
And his insights are really invaluable for anyone looking to protect their capital and potentially profit from these shifts in market sentiment.
Right. Now that we've kind of dissected the U.S. market's vulnerabilities, let's broaden our horizons and explore the opportunities and risks in international markets.
Sounds good.
It's an area that he really dedicates a lot of space to in both reports.
He does.
And for good reason.
He always says the world is more interconnected than we realize.
Right.
And understanding those global connections is key to making smart investment decisions. So where do we begin our international journey?
Well, he starts with a region close to home, Canada.
Canada.
Yeah.
Okay, it's not exactly known for its exotic investment opportunities, is it?
Perhaps not, but as he points out, it's a market with unique characteristics and dynamics that investors really need to understand. For example, he highlights that Canada actually prefers a weaker Canadian dollar.
Okay.
Because it makes their exports more competitive. Imagine it this way, a weaker Canadian dollar is like a sail on maple syrup.
I like that. Okay, so Canada wants their exports to be cheap and attractive.
Exactly.
Which boosts their economy, but a strong U.S. dollar makes things a bit trickier.
It does.
Especially with those ongoing tariff threats from Trump.
Exactly. So it's a delicate balancing act.
It is.
And investors need to be aware of these fluctuations and how they impact different sectors of the Canadian economy.
So apart from natural resources and, a fluctuating currency, what else makes Canada interesting?
Well, he provides a really helpful breakdown of the key indices and ETFs that investors can use to gain exposure. So, the TSX Composite Index, the S&P TSX 60 Index. He also points out that, a surprising number of Canadian companies are actually listed on U.S. exchanges.
Oh.
So it makes it even easier.
So there are multiple avenues there.
Mm-hmm.
But as with any investment, due diligence is key.
Absolutely. And speaking of due diligence, he doesn't shy away from discussing the risks either.
Right.
Particularly those stemming from these strained U.S.-Canada relations. Remember, a trade war could have a ripple effect across both economies.
Absolutely.
Impacting everything from, energy prices to manufacturing output.
It's a reminder that even those seemingly stable markets can be vulnerable to those shocks. Now, from the familiar territory of Canada, let's venture into a region that might be a bit more of a mystery to many U.S. investors.
Okay.
Latin America.
Latin America.
What insights does he offer on this diverse and often volatile region?
Well, he starts by painting a realistic picture, acknowledging the challenges, modest growth, high inflation, persistent poverty in some areas. He also points out that many Latin American economies are heavily dependent on commodity exports,
Okay.
which makes them susceptible to global price swings.
So it sounds like a bit of a roller coaster ride.
It can be, but he also emphasizes that for those willing to do their homework, understand the nuances of each country, there are attractive opportunities to be found. He highlights, for example, the importance of improving financial systems in Latin America.
Okay.
This would not only attract more foreign investment,
Yeah.
but also benefit local citizens and businesses.
So it's about looking beyond those headlines.
Yeah.
Understanding that long-term potential. So how does he suggest approaching this complex region?
Well, he provides, again, a breakdown of the key indices and ETFs that track the performance of Latin American markets. So, for example, the ILF, the Latin America 40 Index iShares ETF.
Okay.
This gives you exposure to some of the largest and most liquid companies in the region. He also suggests, looking at country-specific ETFs that focus on markets like Brazil,
Okay.
Chile, Colombia, Peru.
So there's definitely a lot to explore in Latin America. But I imagine it can be quite daunting for those used to the U.S. market,
It can be.
with its relative stability and transparency.
Exactly, and that's why he emphasizes research, due diligence,
Right.
and potentially seeking guidance from experts.
Sure.
He also reminds us that political risk can be a major factor in this region.
Okay.
Governments and policies can change quickly
Yeah.
and unexpectedly.
It's a reminder that those events can have a big impact, no matter where you invest. From those markets of Latin America, let's hop across the Atlantic and explore Europe. What stands out in his analysis of this region?
Well, he starts by reminding us that the Eurozone, which comprises 20 European countries that use the euro, is actually the world's second largest economy.
Wow.
That's a force to be reckoned with.
It is.
Yeah.
But I imagine Europe is facing its own set of headwinds these days, right?
Of course, he points to slow growth,
Yeah.
high debt levels in some countries,
All right.
and this ongoing uncertainty surrounding Brexit.
Brexit, that seems to have been dragging on forever.
It has, and it continues to cast a shadow over the European economy, making it difficult to predict the long-term consequences.
So with all these challenges, are there still attractive investment opportunities in Europe?
He seems to think so. He points to sectors like technology,
Right.
healthcare, consumer goods as having strong potential for growth and innovation.
Okay.
He also reminds us that many European companies are global leaders in their industries and have this long track record of profitability.
So it's about looking beyond the headlines, focusing on those companies that have proven themselves.
Exactly, precisely.
Yeah.
And he provides, insightful commentary on some of the key European markets.
Okay.
Germany, France, Italy, Spain, the UK.
Okay.
He talks about their economic strengths, the performance of their stock markets, and some of the leading companies that investors might want to research.
So while there are certainly risks and uncertainties, it still offers a diverse range of opportunities
It does.
for those willing to do their homework.
Now let's continue our eastward journey and explore those markets of Asia.
Asia, that's a region that can feel both incredibly exciting
Right.
and incredibly overwhelming for investors. Where do we even begin to unpack the complexities of this vast continent?
Right. Well, he does a great job of breaking it down into manageable chunks,
Okay.
starting with, the two giants of the Asian economy, China and Japan.
Those are definitely the heavy hitters in the region. What's his take on China?
Well, he acknowledges that China's economic transformation has been nothing short of extraordinary,
It has been.
propelling it to become, the world's second largest economy.
Right.
But he also cautions that China is now facing its own set of challenges.
Such as?
So, slowing growth, rising debt levels, persistent trade tensions with the U.S.
It's a reminder that even economic superpowers aren't immune to those forces of change and disruption.
Right. And so for investors, it's crucial to understand how these factors might impact, their investment decisions. He emphasizes the importance of understanding the Chinese government's role in the economy,
Okay.
how their policies can influence, different sectors. He also recommends focusing on companies that are well positioned to benefit from China's growing middle class.
It's about anticipating those long-term trends and identifying those companies that are likely to be winners in the coming years.
Exactly. And he provides a list of those large cap Chinese companies
All right.
that are worth researching, including, household names like Alibaba, Baidu, Tencent. He also mentions a few ETFs that offer broad exposure.
Turning to Japan, it's a country with a very different economic story than China.
Right.
Grappling with slow growth and deflation for decades. What does he see as the key opportunities and challenges for investors in this technologically advanced but economically stagnant nation?
Well, he acknowledges Japan's economic struggles, but emphasizes that it's a country with this really strong foundation of innovation and technological prowess.
Right.
And he points to sectors like robotics, automation, renewable energy as potential areas of growth.
So while Japan might not be that high-growth, high-return market that it once was, there are still opportunities for investors.
Right. He highlights some of the unique cultural aspects of Japan
Okay.
that contribute to its economic resilience, like its focus on quality, craftsmanship, long-term planning. These factors have helped Japanese companies maintain a global edge in industries like automotive manufacturing, consumer electronics.
It's a reminder that understanding those cultural nuances is important as well. And he provides some insights into the Japanese stock market.
Right. The Nikkei 225 index, some of those leading Japanese companies that investors might want to consider. He also reminds us that currency fluctuations can have a significant impact on investment returns.
Right.
Specifically, the movements of the Japanese yen.
So even though the Japanese economy might not be as dynamic as some other Asian markets, it's still a region that shouldn't be overlooked.
Agreed. Now, beyond China and Japan, he also provides this concise but insightful overview of other key Asian markets.
Okay.
So we're talking South Korea, India, Singapore, Hong Kong, Australia.
What?
He discusses, their unique economic characteristics, the performance of their stock markets, some of the leading companies and ETFs.
It sounds like a whirlwind tour of the Asian economic landscape.
It is. And one thing that he emphasizes throughout, his discussion of these international markets, particularly in Asia, is the importance of understanding political risks.
Ah, yes, those geopolitical wild cards. They can throw even the most carefully crafted investment strategy off course. What specific risks does he highlight?
Well, he reminds us that, political instability, regulatory changes, even military conflicts can have a dramatic impact on investment returns.
Sure.
And these risks are particularly relevant in regions like Asia, where geopolitical tensions are high.
Right.
So he uses those ongoing trade disputes between the U.S. and China
Right.
as a prime example,
Makes sense.
highlighting how they can create uncertainty and volatility in the markets.
That's a reminder that we can't just focus on the numbers.
Right.
We need to understand that political and social context as well.
Exactly. And so he encourages investors, stay informed about global events,
Yeah.
diversify their portfolios, be prepared for the unexpected.
Now, after exploring those markets of Asia, let's turn our attention to a region that's often overlooked by investors,
Okay.
but holds immense potential for growth and development. Africa.
Africa, a continent of incredible diversity,
It is.
both in terms of its people and its economies.
Right.
And he does a great job of capturing that diversity in his analysis,
Okay.
acknowledging both the challenges and the opportunities that exist in this vast and often misunderstood region.
So what are some of the key takeaways from his discussion of the African market?
Well, he starts by acknowledging that many African countries are still struggling with poverty,
Right.
political instability, underdeveloped infrastructure. These are serious challenges that can create significant hurdles for investors.
So it sounds like a high-risk, high-reward kind of environment.
It can be, but he also emphasizes that Africa is a continent of enormous potential.
Okay.
With a young and growing population, abundant natural resources, and this rapidly developing middle class.
So it's about looking beyond the headlines and recognizing that Africa is not a monolithic entity.
Absolutely.
Each country has its own unique set of circumstances and opportunities.
Exactly. And he believes that investors who are willing to take a long-term perspective and understand those nuances can find attractive opportunities.
Where does he see the greatest potential for growth and investment?
Well, he highlights sectors like infrastructure development, renewable energy technology, and consumer goods.
These are all sectors that are experiencing rapid growth globally.
They are.
Makes sense that Africa would be a prime market for these industries.
Exactly. And as more and more African countries embrace technology, invest in education, build stronger institutions, we can expect to see even more opportunities.
So while investing in Africa might seem daunting for some, it's a market that shouldn't be ignored.
Agreed. Now, as we kind of transition from our discussion of these regional markets to, a broader exploration of emerging sectors and trends, there's one important factor that he emphasizes throughout his reports: currency risk.
Currency risk, that often overlooked factor that can eat into your returns.
Exactly. When you invest in a foreign country, your returns are not only affected by the performance of the investment itself,
Right.
but by the fluctuations in the exchange rate between your home currency and the currency of the country you're investing in.
So even if your investment is performing well, a weakening foreign currency can diminish those returns when you convert those gains back into your home currency.
Exactly. And on the flip side, a strengthening foreign currency can amplify your returns.
So it's a double-edged sword.
It is, and investors need to be aware of it.
So how does he suggest investors manage this risk?
Well, he discusses various strategies, including hedging techniques and diversification
Okay,
across different currencies.
makes sense.
He also points out that currency fluctuations themselves can sometimes create investment opportunities. For example, a weakening currency can make assets in a particular country more attractive to foreign buyers,
Okay, interesting.
creating these potential bargains for savvy investors.
So it's not just a source of risk.
Right.
It's also a potential source of opportunity as well.
Absolutely. Now, as we delve into his insights on specific sectors and trends, keep in mind that currency risk is a factor that can influence investment outcomes in all these areas,
Okay.
especially those international markets.
Now, let's shift our focus to some of those exciting emerging sectors that are capturing the imagination of investors around the world.
Yeah, he dedicates a lot of time in both reports
Yeah.
to these trends.
Yeah,
And his insights are always thought-provoking.
they are. So what are some of the key areas he highlights?
Well, he's got a section on artificial intelligence and robotics,
Okay.
biotechnology,
Okay.
the cannabis industry,
Oh, wow.
and even space exploration.
Oh,
It's a diverse mix that really reflects this rapidly changing landscape of the global economy.
it's like a glimpse into the future of innovation and investment.
It is. And he doesn't just talk about the technology itself.
Yeah.
He explains why these trends are important,
Okay.
what their market implications are, how investors can potentially capitalize on these emerging opportunities.
So he's really trying to help us understand what's happening and how to potentially profit from it.
Absolutely.
Let's start with artificial intelligence and robotics. It seems like AI is everywhere these days. What does he have to say about the investment implications of this rapidly evolving technology?
Well, he starts by explaining, how AI is fundamentally transforming the way we live, work, interact with the world.
I mean, it really is.
He talks about how, machine learning algorithms are being used to analyze these vast amounts of data,
Okay.
automate tasks, make predictions
Right.
with increasing accuracy.
It's almost like AI is becoming this new form of intelligence,
Yeah,
complementing and even surpassing human capabilities in some areas.
absolutely.
It's a bit scary, isn't it?
It can be. But, he believes that AI is going to have a profound impact on virtually every industry.
Yeah.
From healthcare and finance
Right.
to manufacturing, transportation. He points out that companies that are able to effectively harness the power of AI will have this significant competitive advantage.
So how does he suggest investors approach this rapidly evolving field?
Well, he provides a helpful overview
Okay.
of those key players in the AI space. So,
Mm.
we're talking about companies like NVIDIA, Google, Microsoft, Amazon.
Right.
They're developing the hardware, the software, the algorithms that are driving this AI revolution.
And they're all publicly traded companies.
Exactly. And he also mentions some specialized ETFs that focus on AI and robotics.
Okay.
So, allowing investors to gain this broad exposure
Right.
without having to pick, individual winners.
So it sounds like AI is a complex but incredibly promising area.
It is. And he emphasizes, do your research,
Yeah.
understand the technology,
Makes sense.
be prepared for, a lot of volatility.
Right.
Because it's still a relatively early stage.
Now, what about biotechnology? That's another sector that's constantly making headlines.
Right. Breakthroughs in gene editing, personalized medicine, new drug discoveries.
What's his take on the biotech space?
Well, he shares, your enthusiasm. He talked
Okay.
about how biotech is revolutionizing healthcare,
Yeah.
leading to these new treatments and cures
Right?
for diseases that were once considered incurable. He highlights some of those key areas of innovation, including, gene therapy, immunotherapy, stem cell research.
It's incredible to think about the potential of these breakthroughs to alleviate human suffering.
Absolutely. And he believes that the biotech sector offers tremendous opportunities for investors who are willing to embrace the risks inherent in this highly innovative and often volatile industry.
Okay, so it's not for the faint of heart, but the potential rewards could be enormous.
They could. And he provides some guidance
Okay.
on how investors can approach the sector, including, focusing on companies with strong management teams, promising drug pipelines, and a solid track record of research and development. He also mentions some specialized ETFs that focus on different areas of biotech.
Right, so there's a lot there.
Yeah.
Now let's move on to a sector that's been generating a lot of buzz.
Yeah.
Cannabis industry. What's he have to say about this rapidly growing market?
Well, he starts by acknowledging that the cannabis industry is undergoing this period of rapid transformation.
It is.
As more and more countries are legalizing the use of cannabis for medical and recreational purposes. He points out that this is creating this massive new market with significant growth potential.
It's amazing to think about how quickly attitudes are changing.
They are.
And laws are changing.
And he believes that this shift is creating significant investment opportunities. But he also cautions that the cannabis industry is still in its early stages of development.
Right.
There are many risks,
Of course.
uncertainties involved.
Yeah.
He talks about the challenges of navigating this complex regulatory landscape, the volatility of cannabis prices, the intense competition.
So it's a high-risk, high-reward sector.
Absolutely. And so, he provides tips for investors.
Okay.
Focus on companies with strong brands,
Right.
established operations,
Makes sense.
and a clear path to profitability. He also mentioned some ETFs that track the performance of these cannabis companies.
For our final exploration of emerging sectors, let's venture into the final frontier, space exploration.
Now, this is truly fascinating.
It is, and he seems just as excited about it as we are. What's his take on the space exploration sector?
Well, he starts by explaining how the space industry is undergoing this renaissance,
Okay.
driven by advances in technology, falling launch costs, growing interest from private companies and governments.
It's incredible to think that space travel is no longer just the domain of government agencies.
Right.
Private companies are now playing a major role.
Absolutely. And so he believes that this is creating significant investment opportunities in areas like satellite communications, Earth observation, even space-based manufacturing. He also points out that the space industry is likely to become increasingly integrated with other sectors. So think telecommunications, energy, materials, science.
So it's a sector with both near-term and long-term potential.
It is. And so he provides these insights into the key players in the space industry, including those established aerospace giants like Boeing, Lockheed Martin, as well as, newer entrants like SpaceX, Rocket Lab. He also mentions some specialized ETFs that focus on the space sector.
As we wrap up our exploration of these emerging sectors, it's clear that the global investment landscape is changing rapidly.
Yeah.
Driven by technological innovation, demographic shifts, and this evolving geopolitical landscape.
Absolutely.
It's a time of great opportunity.
And great uncertainty.
And investors need to be informed, adaptable, forward-thinking to navigate this new reality.
Absolutely. Now, before we move on to the final segment, where we delve into his specific insights and predictions, I want to take a moment to kind of reflect on one of the key themes that emerges from both of his reports.
Okay, what is that?
It's the importance of independent thinking and critical analysis.
Yeah.
He constantly challenges us
He does.
to question the conventional wisdom, to be skeptical of those narratives being spun by, Wall Street and the mainstream media.
Yeah.
And to do our own research.
He's a true champion of financial literacy.
He is. He's not just giving us investment advice. He's teaching us how to think for ourselves.
Right. Yeah.
To be responsible stewards of our own financial well-being.
It's a reminder that we're not just passive participants in the market. We have the power to shape our own financial destinies.
Absolutely. Now, with that empowering thought in mind, let's dive into the final segment.
Okay.
Where we explore his specific insights and predictions for what lies ahead.
I'm ready.
Will his prediction of a January pullback come to fruition?
Yeah.
Will those tariffs on Canada materialize?
Right.
Will Bitcoin continue its meteoric rise?
Good question.
Stay tuned to find out.
Welcome back to the final part of our deep dive. We're going to unpack Bill Cara's crystal ball, so to speak. In WI*2, he lays out some pretty specific predictions and observations that are sure to keep investors on the edge of their seats. We've already touched on his prediction from WI*1 about a January pullback, but in this new report, he doubles down on that call.
What I find really intriguing is how he connects these seemingly disparate factors.
Right.
He points to those inflated price earnings multiples we discussed earlier, coupled with the technical indicators like the RSI 7 and MACD flashing sell signals. But the real wild card, according to Cara, is JP Morgan's upcoming Q4 earnings report.
Okay.
He thinks their forward guidance could be the catalyst that sends the market into a tailspin.
Wow, he's really hanging his hat on this report, isn't he? What makes him so sure they'll spook the markets?
Well, he anticipates that JP Morgan, being a bellwether for the financial industry, might express some pretty serious concerns about inflation and the need for the Fed to maintain those high interest rates. And remember, this is happening against a backdrop of, already heightened anxiety surrounding Trump's unpredictable policies.
So it's like a tinderbox waiting for a spark.
Exactly.
And Cara seems to think this JP Morgan report could be that spark. He even paints a pretty dramatic picture of a potential market plunge, describing a no-bid situation where selling pressure just overwhelms buying interest, leading to this cascade effect.
Right.
It's enough to make even the most seasoned investor a little bit nervous.
It is. But remember, Cara has navigated countless market cycles throughout his career.
Yeah.
He's seen the euphoria of bull markets, the despair of bear markets.
He's seen it all.
And he's really developed a keen sense for recognizing those inflection points.
So if he's predicting a pullback, what's his advice for investors?
Well, he's not in the business of giving specific investment advice anymore.
Right.
But he does offer some timeless wisdom. He encourages investors to carefully assess their own risk tolerance, their investment objectives. And, if the market's volatility makes you uneasy, there's no shame in holding treasuries, increasing your cash position.
Sometimes the best offense is a good defense.
Exactly. He also stresses the importance of diversification, not just across different asset classes, but across different geographic regions as well.
Right. Spread your risk. Don't put all your eggs in one basket.
Exactly.
Now, moving beyond his market predictions, Cara also provides some fascinating updates on other key areas, like the U.S. dollar and its continued dominance in global markets.
Yeah, he reminds us that the strength of the U.S. dollar has implications far beyond U.S. borders.
It does.
It influences everything from international trade, currency valuations, to the competitiveness of different economies.
And of course, we can't forget about Bitcoin and the world of cryptocurrency, especially with Bitcoin's price surging past 100,000.
Right.
Cara dives deeper into the potential impact of Trump's crypto-friendly policies.
He does.
Speculating about things like a U.S. crypto stockpile, favorable regulations.
It's amazing how quickly that landscape is changing.
It is.
And how those political decisions can have such dramatic impact on this asset class.
But even with Trump seemingly embracing crypto, Cara advises caution.
Right.
He reminds us that the crypto market is incredibly volatile.
Yes. Prone to those wild price swings.
Exactly.
And so he emphasizes that, cryptos like Bitcoin and Ethereum are still largely speculative assets.
Right.
Driven more by market sentiment and momentum than by, underlying fundamentals.
Of course, he can't resist reminding us that a single tweet from the president can send the market soaring or crashing.
Absolutely. Absolutely.
It seems like navigating that world requires nerves of steel.
And a healthy dose of skepticism.
For sure. Now, as we wrap up this deep dive into Bill Cara's Weekend Review Report number 2, it's worth emphasizing one of his most important messages: the importance of independent thinking and critical analysis. He's constantly challenging us to question the conventional wisdom, to be skeptical of the narratives that are spun by Wall Street and the media, and to develop our own informed investment philosophy.
He's empowering us to become active participants in shaping our own financial destinies rather than passive followers of the crowd.
And in today's complex and rapidly evolving world, that's a valuable skill indeed. So for those of you seeking insights that go beyond the headlines, I highly recommend checking out Bill Cara's Week in Review reports. They're packed with knowledge, wisdom, and that refreshingly independent perspective that we all need to navigate these turbulent markets.
Until next time, happy investing.